Okay, this is section 2, you might call it, of the tax extenders. These are business extensions, business extenders. As you can see, I have a list of them on our website here. So, I mean, on our screen here. So you can go through those. But I'm going to talk a few things. But most of these are for big business. But I have listed them so you can go through them and see if anything may apply. Where I think it may help the small businessmen like truck drivers or people with small plants with less than 100 employees, it might be, I'm going to make some comments that might help you. All right, so the first one was credit for increasing research activities. I'm going to read that IRS explanation. Hopefully there is something that you can use. Right? The research credit is generally allowed for expenses paid or incurred for qualified research. Qualified research means research for which expenses may be treated as a 174 expense. 174 is depreciation, so that's cool. This research must be undertaken for discovery of information that is technology in nature, and its application must be intended for use in developing new or improved business components of a taxpayer. In addition, substantially all of the activities of the research must be elements of the process of experimentation relating to the new or improved function, performance, reliability, or quality. All research activities must be applied separately with respect to each business component of the taxpayer. The research credit generally is not allowed now for the following activities: research conducted for the beginning of a commercial product, research adapted or existing product or process in a particular customer's need, duplication or existing products or a process, survey of studies, that's not deductible as a research of related or certain internal used computer software. Well, that's interesting. I would have thought if you made a software better, it would be research. Research conducted outside of the United States or Puerto Rico or U.S. possessions. Okay. Research in social services. These are not deductible. But if you have something you think is research, go back and look at it again. It never hurts to know something about something else. All right. The other one that I'm going to talk about is the intent of the Indian credit to provide business with incentive to hire certain individuals who live or near an Indian reservation. Well, that's an interesting one. That certainly is not applied to very many people. But if you have an Indian reservation near you and you have employees that you're getting from there, you might be able to get that employment credit. There is employment credit later on for increasing your employees, but you have to be real careful that you can qualify for it. All right, what else do I want to talk about here? There was one more. New markets credit, that's right. New markets credit. The new market credit program enacted by Congress as part of the Community Renewal Tax Relief Act of 2000. This code section permits individuals and corporations to receive credit against federal income taxes for making qualified equity investments in qualified community development enterprises. What does that mean? It means if you have one of those enterprise zones and you invest in that product or in that thing, then you can, or in the building or the jobs or that kind of stuff, then you might be qualified for this new markets credit. These investments are expected to result in the creation of jobs and material improvements in the lives of residents of low-income communities. Examples of expected projected include financing small business, improving community finance, such as daycare centers, and increasing home ownership. Okay, so home ownership, that means if you help somebody get into a home in a low income area that means you might be able to get this tax credit for new markets. So it needs to be explored. I mean, there's so much you can say about this, but it might be worthwhile to certain people or businesses, is what it was set for. What they don't say is that the credit is deductible for depreciation. What I'm trying to say is the credit is, you take your depreciation. If you get the credit, take the credit off the depreciation, because you can't double dip. That's what I'm trying to say. But anyway, if you have a good tax man, he's going to know that, right? Okay. What else I was going to say here? Well, work opportunity credit, that's a good one. This mostly restrictive. It's more restrictive than it sounds like, but you should try it and use it, and if you can, but try it anyway. So I'm trying to say is try it. Look at that as a possibility. Number 10 is, love this one. It helps defray of ownership racehorses, yay, which are not profitable to, racehorses are not profitable to the owners, so being able to depreciate it in 3 years is a good one. So I'm all for that one they gave us, right? Number 11, this is good for restaurant owners. So if you own a restaurant, you might want to use this one. Number 12, it helps with cash flow when you buy a big asset. That's a good one too. That's the bonus depreciation. Number 13 is, normally you wait off until the inventory, normally you write off your inventory, but if you can give it away to a charity, it has to be a charity now too. Don't think you can just give it to the homeless there. It doesn't work. But anyway, that's a good thing to have. Another good one is for small business, number 14. Well, as you can see, special interest groups have these and get these tax laws. So but being a small businessman does get some help too. So if you're a small businessman, you may get some help from this. All right, that's all I have to say about the business deductions that we've listed out there. Again, if you need more information, you can look at my website, Tax Show Radio, and on that Tax Show Radio is a contact list for me, Don B, the tax man, and business advisor. I want to say that number one. I like to do business advice, and I have quite a few clients. So I'm always looking for new clients because I love new business. I love to see how people are making money. I have tons of stories I could talk about, but this is not the time. So this is Don B saying, check out my next video, which is going to be on tax